Hello everyone, welcome back to my channel. I'm Japan Life Hacks. I'm delighted to have you join me for today's video. Methods for companies to make payments or receive money aren't limited to just checks. When there's a shortage of cash or a low balance in the checking account, there's a need for payment methods that can postpone payment deadlines as much as possible. This video will delve into these payment methods. Now, let's get started. The first content. Promissory notes. A promissory notes is a document specifying when and how much a company will pay. Let's take a look at what a promissory notes actually is. Understanding these 5 elements is sufficient. 1. Type of promissory notes. 2. Recipient of the promissory notes payment. 3. Amount of the promissory notes. 4. Due date for payment of the promissory notes. 5. Drawer of the promissory notes. The recipient of the promissory notes can take it to the bank to receive the funds. Similar to a promissory notes is a check. When you take a check to the bank, the funds are deposited immediately, but with a promissory notes, the funds aren't deposited until the payment due date arrives. A promissory notes allows for setting a payment due date 2 to 3 months from the date of issuance. Now, let's examine the journal entry. First, let's examine the journal entry for when a promissory note is received. Sold merchandise worth 500 yen and received a promissory note. The journal entry is as follows. Debit, note receivable 500. Credit, sales 500. When you receive a promissory notes, you gain the right to receive the payment later. This right is accounted for as an asset under note receivable. Next, the due date for the promissory notes arrived. 500 yen was credited to the checking accounts. The journal entry is as follows. Debit, checking accounts 500. Credit, note receivable 500. When you receive the payment on the due date of the promissory, the asset of note receivable disappears. Next, let's examine the journal entry for when you issue a promissory note. Purchased merchandise worth 500 yen, payment made by issuing a promissory note. The journal entry is as follows. Debit, purchases 500. Credit, note payable 500. When you issue a promissory notes, you undertake the obligation to pay the amount later. This obligation is accounted for as a liability under note payable. The due date for the promissory notes arrived. 500 yen was debited from the checking accounts. The journal entry is as follows. Debit, note payable 500. Debit, checking accounts 500. When you pay the amount of the promissory notes, the liabilities of note payable disappear. The second content. Electronic record of receivable, payable. Electronic record of receivables and payables refers to transforming receivables and payable into electronic formats. Let me further explain the terms receivable and payable. Receivable, it's the right to demand money, goods, services, etc., from someone and enforce that claim. Payable, it refers to the obligation to provide money, goods, services, etc., to someone. Let's get back to the main topic. The promissory notes used so far have several drawbacks, such as the risk of loss and the administrative hassle of issuance, among other issues. The emergence of electronic record of receivables and payables has addressed these drawbacks. Instead of physical promissory notes or checks, it involves handling receivables and payables through electronic records. The name might sound complicated, but rest assured, the journal entry itself is quite simple. Before explaining an example journal entry, let's make the concept a bit clearer. Let's say there's a transaction between Company A and Company B for buying and selling merchandise. As a result, Company A has an accounts receivable trade, while Company B has an accounts payable trade. These receivables and payables can be converted into electronic records by requesting the Electronic Receivable Recording Institution. Let's now examine the journal entries for companies A and B. Let's start by examining the journal entry on the side of Company A. Company A sold merchandise worth 1,000 yen to Company B on credit. The journal entry is as follows. Debit, accounts receivable trade 1,000. Credit, sales 1,000. Next is the journal entry to transfer this accounts receivable trade to electronic record of receivable. Later, Company A approached the electronic receivable recording institution to claim the creation of the receivable from Company B. The journal entry is as follows. Debit, electronic record of receivable 1,000. Credit, accounts receivable trade 1,000. Next, let's look at the journal entry when this electronic record of receivable is settled. The payment for the electronic record of receivable was completed and deposited into Company A's checking accounts. The journal entry is as follows. Debit, checking accounts 1,000. Credit, electronic record of receivable 1,000. Let's now review the journal entries from the perspective of the Company B. Company B purchased merchandise worth 1,000 yen from Company A on credit. The journal entry is as follows. Debit, purchases 1,000. Credit, accounts payable trade. Next is the journal entry to transfer this accounts payable trade to electronic record of payable. Later, Company B registered the occurrence of the payable to Company A with the electronic receivable recording institution. The journal entry is as follows. Debit, accounts payable trade 1,000. Credit, electronic record of payable 1,000. Next, let's examine the journal entry when this electronic record of payable is settled. The payment for the electronic record of payable was completed and withdrawn from Company B's checking account. The journal entry is as follows. Debit, electronic record of payable 1,000. Credit, checking accounts 1,000. The electronic record of payable is debited as the obligation to pay is extinguished. Thank you for watching the video. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your comments are the driving force behind the creation of my next video, so please feel free to leave them. Thank you very much in advance. See you next time.